Hello everyone and welcome to this morning's webinar for the London Forex session. Thank you so much for your patience. But as always, as you know, before we start, may I draw your attention to the disclaimer that I know you can see on the screen. As you know, trading can be a risky business, so please don't ever think of using money that you cannot afford to lose. As we started a few minutes later than we anticipated, I'm just going to whiz through the next couple of slides very quickly. We're going to be looking at obviously the Forex market charts, and we're going to be looking at the charts through the prism of volume price analysis, that is price action and volume, basically to see whether what we're seeing on the chart is authentic or not. But with the Forex market, really as with all markets, but in particular with the Forex market, we need to see what's happening with regard to the fundamental news, releases, data releases. And also there is another element to Forex trading, and that is what is going on in the related markets. And I know I say this every week, but you know, I'm always quite surprised the number of traders, new traders, even traders who've been around a little bit, don't always appreciate that individual currencies and currency pairs do have a relationship with other markets through the prism of sentiment, or and direct relationship, because maybe that currency is from a country that produces a certain commodity, such as oil. So, you know, the Canadian dollar has a very close relationship with what is happening in the oil market. So, you know, there are these intermarket relationships, and it really does help if you understand, you know, where all these connections are. It just makes, you know, what you're seeing on the chart a lot more clear. Right. What we've also done, this is David and I, we have developed these were developed for ourselves originally, and now we sell them. We have some of our users, our quantum trading users. These are specific tools that we have developed to help us, if you like, deconstruct the Forex market. As you know, the Forex market, you trade a pair. You have one currency pitted against another, as it were, and that is unique. You know, you don't trade oil against gold. You may look at oil and gold and see what individually they may be doing, but you don't necessarily, unless you're pair trading, you don't have a ticker which says, you know, oil gold or gold soybean. In the Forex market, you do. You have you know, the pairs of the different currencies, and what we wanted to do was, first of all, we wanted to tease them apart. We wanted to see where the flows were going into the individual currencies, and then put them together again and basically get a feel for what was moving up strongly, what was moving down strongly, what sort of trend there you know, there was in these pairs. And the last of the indicators is here, is a heat map, was to look at it in multiple time frames, because we're looking at 28 charts, as I said, from the 1 minute right through to the month. And they are a time-saving, you know, not only do they give us this view on flow, and flow tells us what sentiment is and what is going on perhaps in other markets as well as the Forex market, but we wanted to see that across the 28 pairs in multiple time frames. So as I said, they are a time saver as well, but we will see how we use them as we go through the session. Right, what's been happening this morning? And in fact, I've been looking at the pound Aussie at the moment, and once you see the CSI, you will know exactly, well, you'll know exactly why, because the Aussie, which is the blue line, and the New Zealand, they've both had, they've been selling off very, very heavily. And as you can see here, this is the hourly chart. They are at what we call a very oversold, in this particular time frame. Now, what they're particularly oversold against is the euro, which has had some really strong buying in it since yesterday, actually, and also the Swiss franc. So this is actually, it's rather nice to see this, because what it is also telling us is, not only is it telling us where the money's been going, if you like, into the individual currencies, but it's also telling us that potentially we have a really nice sort of reversal situation setting up, because, you know, nothing stays oversold or overbought forever. This is a market market of mean reversion. It's an oscillating market in all the time frames, and as traders we have to make a decision. Do we want to wait for, if you like, one of these waves to have reached a peak or a trough, and then we take that reversal from trough back to peak and peak the other way? There is another way of trading, and that is during those periods of oscillations, the pairs will actually just move into congestion, because nothing moves straight down or straight up in a straight line. So as they go up and as they go down, they congest, they pause for all sorts of different reasons. And when they do that, then break back in the direction of the primary trend, as we can see here for the euro and the Aussie was going up, or is it actually a reversal from that congestion? So lots of decisions to have to take, and you as a trader, you have to become comfortable with the type of chart setup that you like to trade. What do you like to see in a chart? How many, if you like, confirming signals do you like to see on a chart? Because not every trader is necessarily aggressive. There's a spectrum of trader behavior, if you like. Some traders are very aggressive. They may see maybe one signal, they may be maybe one or two, and they think, right, that's it, I'm going for that one. But that necessitates taking on more risk. How much risk you are prepared to take, not just the financial risk, but the risk on the trade, really comes down to you as a personality. What is what we call in our program, your trading persona? And there's no right or wrong. So don't ever feel that, when there is a signal that appears on a chart, a strong signal, a strong VPA signal, maybe a shooting star candle, maybe a hammer candle, maybe, a two-bar reversal. Some traders will feel comfortable going off that one signal. Other traders will say, yeah, that's awfully interesting, but I want a little bit more confirmation of that. What is it before I decide to take that trade? And in fact, to be honest, there's a great example of this on the hourly chart of the dollar Swiss. This was actually a question that came into our forum. One of our students says, well, this was a move, this was from yesterday when the dollar was had been bought quite heavily, and then began to sell off, and it was selling off at the London Open. Now, with the dollar, you have to remember the dollar is a safe haven currency, but when the indices are moving strongly higher, as they were yesterday, the dollar can be sold. And not always, but generally speaking, it has a good correlation between indices moving higher. The dollar will tend to be sold off. When the market is in a negative mood, or there's fear, or there's a geopolitical event, call it what you like, the dollar will be bought along with other safe haven currencies. And the question is, well, this was the mood. Now, this is the hourly chart. I've got a couple of things I want to say about the hourly chart, and this is it. If you are on the slightly slower time frames, particularly the hours, the 4s and above, I really think you should consider looking at the price action close to when you have a session crossover, because rather than in between, saying, oh, this is the hourly, you're maybe halfway through a session and you're on the hourly chart, you will find that the hourly chart does sometimes move quite strongly coming into a new session. And by a new session, this is London, there's Europe, London, New York, and then obviously you've got Asia. But anyway, very, very quickly, so what are we actually seeing here? Well, there's all sorts of signals that came up. First of all, we have the CSI, and this is what I also suggested, is actually on the individual pairs, actually put the indicator at the bottom of the chart, but take off all the other currencies and just have the currencies that relate to this particular chart. Well, what are we seeing with this pair? I had to annotate it so that it was made it a bit clearer. But essentially, what we saw was the pair moving up and coming to this resistance. It just happened to be as well our Camarilla resistance, the R2. But if you look across to the left of the chart, you can see here that at this point, it had actually reversed from here on one and on two previous occasions over the since last week, basically. I didn't reduce the chart anymore. I just kept it to, as I said, within the last week or so. So if you were watching this pair, and it could be this pair or any other pair on the hour, and you could see that it was hitting this price resistance, this Camarilla resistance, you knew that, okay, was there perhaps a potential for a, was it going to pause? Was it going to reverse? We don't know. It happened to coincide with, in fact, coming up to the London session, but it's actually the European session. And in fact, there was volatility, there was a big move to the downside, to the extent that in fact the volatility indicator was triggered. This is this little purple dot that you can see on here, which tells us that this price action in this candle was outside of the average true range. Now, in doing so, as I said, you then got a bearish engulfing candle. In other words, this candle totally engulfed the price action of the previous one. And in fact, if you overlay one on the other, you do get a very large moving shooting star. So you see that it hits a resistance. You get a good candle signal. It's slightly, you think there's the volatility trigger, because when volatility is triggered, the price action does tend to reverse into the spread of the candle. Then it can congest. So, how are you as a trader? You think, no, I like that. There's enough in there. Because I'm only interested. Traders who tend to be a little bit more aggressive will go in and come out quite quickly as well. They see the signal, they go in, they come out. Perhaps if you like to, to be a bit more considered, you think, no, I'm going to wait and see what happens. They will see that, yeah, that's interesting, and maybe I'll wait for another confirming signal. Now, what's interesting is this price action took the pair, in fact, to the volume point of control. The volume point of control is that zone on the chart where, if you like, the price has been or is in price agreement. It's in congestion. It could be a very wide congestion. It could be a volatile congestion. It could simply be an oscillation around this point. It's the fulcrum of the market. You can see here why it was the volume point of control. You can see the number of times it tried to break away, come back, go to the downside. And so it's where the market is in agreement. There is no strong bias one way or another. We can see that reflected in the CSI down here. This because we have these two lines representing the currencies. They will move like they will intertwine, they will look as though they're going to diverge, and then they'll come back again. And it can be a very frustrating period of price action, particularly on the, if you are trading the slower time frames. On the faster time frames, they're obviously not going to stay necessarily in this state, for very long. It's more of a matter of minutes, maybe hours. But on the hourly chart, what do we have here? It's been in congestion actually since the 15th, since last week. That doesn't mean to say that this bit of price action here, this little section here, this is the hourly chart, down on the faster time frames, there may not have been an opportunity for a trade. That is a separate, issue. Right, so basically that was the first signal down to the volume point of control. Now we know when it hits the volume point of control, it has to have some, maybe will it diverge, or, will it attempt to break away or not? In this case, it did. Coming down to the VPOC, right, there's another, so maybe you didn't get in here, got to the VPOC, okay, let's see what happens next. Now, what actually happened when it got to the VPOC, it coincided with the cross on these two lines. Now, crosses on the CSI can be quite useful. As I said, you can be a reversal trader when things are overbought or oversold, but when they do cross, you may have missed the initial move, as it were, which we did here, but it could be setting up for some divergence. And in fact, this is what happened. In fact, we ended up with a really nice waterfall on the dollar Swiss. And being the hourly chart, this was quite a considerable move. And we simply left it. It was coming up to the New York session, as I said, So we had Europe, we had London, and then we're coming up to New York. Also illustrating the importance of watching the price action in the context of where you are in the 24-hour cycle. I really can't stress this enough. And it's not just forex now, it's Globex, it's the cash open for New York. You know, these 20 new traders are come into this market, and it's great. It seems, you know, you can access these markets on a 24-hour basis, which you can, but in reality, the sessions have their own patterns, they have their own focus, if you like, not only on currencies and currency pairs. And it's almost as if, you know, when you are coming to trading, you know, they do have their own, you know, within the 24-hour cycle, it has a start and a finish. And so in a way, it makes structuring your life as a forex trader a lot easier, because in some, you know, you can combine it with doing other things. Sitting in front, you know, not everyone can sit in front of a screen all day long, you know, 8, 9, 10 hours. You know, focus on the period moving into the opening of the session, wait for the session, choose your currencies, choose your currency pairs, get to know which pairs are likely to be moving, you know, when the new session opens, where the crossover is, and look at the charts, because you will find the pairs themselves, as they come to those times, will pause. And just to finish off, this is the euro dollar yesterday. As I said, the dollar was selling off very nicely. This is again the hourly chart, and again we had exactly the same situation. And I said the euro dollar close, this is a very key level at R4, and it coincided not just with the open in New York, but Christine Lagarde was going to be speaking as well. Now, isn't that, you know, well, it's not unusual at all. It's not unusual at all. We've had the move. So you as a trader, you know, you kind of have to you have to position yourself to the market. You have to get into the rhythm of the market. And once you understand what that rhythm is, it will make life an awful lot easier for you. Right, now, that's what's happened yesterday. What's happening today? As I said, it's the Aussie. Okay, I'm just going to pass over to David. I've been having the pound Aussie. Where are we? Because the Aussie is very oversold. There we are. And in fact, this was the trade that I was looking at, but I'll pass it over. Are you looking at the same one, darling? Yeah. Okay. Yeah. And I've got the Renko, the 3-minute, and this is the hour. In fact, it was the 10-minute here. Let's have a look very quickly. In fact, it was a 2-bar reversal that I spotted earlier. As I said, I saw the 2-bar reversal at the R4. This hadn't quite turned over. The 3-minute had already started to transition, and as I said, and it was pretty much the same decisions that we could see setting up, that we had seen setting up on the pound, on the dollar Swiss yesterday, and it looks like I've got a cross coming up on the pound Aussie. So it looks like a repeat of the price action on dollar Swiss, but on a faster time frame. Right, I'll pass over to David because he's actually been watching it more closely than I have, but I'll keep monitoring it and I'll go and perhaps look for something else.